pleasure to be catching up with Gary Nealon again. Gary, welcome back to Nairobi.
Yes, thank you.
And before we get on to the subject at hand, I believe you've had a little excursion into the wild Tsavo. Tell us a little bit about that.
It was awesome.
Fun?
Yeah, first time there.
Yes.
Went to Fitch Hatton's and had a great experience, yeah.
It was fantastic. Yeah, no, but I always tell people if you've been to the Mara and then you go to the Tsavo, it's completely different.
Yeah, it is completely different.
Yeah.
A little different experience, a little different environment and everything else.
And you got up in the Chulu Hills.
I did, yep. Yeah. Got up in the cloud forest and everything else.
For sunrise?
Yes.
Wow, fantastic.
Yep.
Gary, I wanted to follow on our previous conversation and just develop what we were speaking about further. Can you just now take us to the launching pad? I mean, what are we trying? What is Gary trying to do here? You're trying to raise some money.
Yep.
Yep. Just talk us through that again, if you don't mind.
Yeah. So our goal is to raise anywhere from 150 to 250 million to really have an impact on the economy for Nairobi and Kenya as a whole. That would be our initial launch, and then our goal is to get about $1 billion under contract. And really, what we want to do is our ultimate goal is to be able to provide access to savings, utilities, or vehicles for the unbanked, or for people that traditionally would not have access to that, while also working with the banks to give them a stable and solid investment tool so that it doesn't have the fluctuations that some of the investments that they have right now.
The rates that you've been talking to me about, the optics of those rates are very attractive. So how does an organization like yours manage to deliver interest rates which are as attractive as the ones that you're proposing to bring?
Yeah, because a lot of our investments are not based off of speculation, they're based off of hard assets. So based off of the type of properties that we're buying, the fact that they're cash flowing, and we're using actual real estate, we can guarantee those rates because it never changes. It's not based on the valuation of the property or what it could be after being built or something like that. It's cash flowing from day one, so we're guaranteeing those rates simply by having that cash flow coming through.
And a lot of people ask me about, are these asset-backed securities as such? When you talk about real estate, is it actually an asset-backed security that someone's giving you money for?
Yeah, it depends on what the definition is you want to use, but for the most part it is an asset-backed security. Essentially what we're doing is we're investing in hard assets, which are real estate based in the US, in markets that we know don't have much fluctuation, have an economy that's strong. We also have a couple other parameters to ensure that the rental income is going to continue, which is usually a couple universities within range, maybe some big corporations that have a lot of transient people coming in and out that aren't looking for permanent residence. And we're also buying way below market value. So we know that even if the market were to come down a little bit, we have a cushion in there that would protect us.
One of the selling features when I was reading through your brochure was that it was a protection against currency devaluation. And this year already we've seen the Ghana cedi, for example, fall to an all-time low. It's down about 12 or 13%. In Tanzania, there's a lot of drama at the moment around conversion of Tanzanian shillings. So it seems to me that it's an appropriate moment in terms of what we're seeing happening. Are you selling it to people on the basis of an enhanced yield and on the basis of a hard currency hedge?
Yeah, I mean, it's really, when we looked at the marketplace, that's kind of what we saw as the opportunity. Yes, we provide a competing interest rate backed by the US dollar, not off the Kenyan shilling or whatever the local currency is. But then we can also, by taking it out of the domestic currency and putting it in the US dollars, we can hedge against the loss, deflation of the currency, or whatever you want to call it, versus the US dollar on a yearly basis, which, as you'd mentioned, in some countries can be as high as 40% over the course of a year, which is, to me, is crazy.
No, there have been some crazy situations,
Yeah.
particularly in Africa. And then you've got these funny situations where you've got dual currencies. If you're well connected, you'll get this rate. If you're not, you'll get another. And I think a lot of people are looking for some kind of certainty particularly around their savings.
Yeah.
I wanted to also touch on, you were describing an environment that you had existed in, setting up your e-commerce business. You were describing to me last time the first tokenization of a property in New York. the blockchain, which, from what I gathered from you, it's a bit like a silver bullet in your mind. At the same time, I read other economists like Nouriel Roubini, who's telling me that cryptocurrencies are all a scam. There's a lot of debate out there, and I wanted to pick your mind and just get a fix from you as to where we are right now. Where in the curve are things like the blockchain, and where do you imagine it being in like 2, 3, 4 years' time? And what do you expect? What should Africa be focusing on if it really wants to, leapfrog and catch up? And this is that moment. Would you be thinking about those different scenarios?
So as I mentioned in our last conversation, there's a big difference between blockchain and cryptocurrency. Blockchain is the underlying technology that allows cryptocurrency to exist, but cryptocurrency was created to be a decentralized type of currency. So I'll kind of address the blockchain first. So blockchain for me, it's being utilized in a lot of different ways right now in different industries, which it's just not really being talked about. So blockchain is really just a decentralized documentation system. So it doesn't allow for the manipulation or the corruption of data.
Is that a guarantee?
Because it's decentralized, so that it's got to be validated by multiple people before it can actually be changed. So and since most of them are anonymous, there's no way that you could corrupt the system and, unfortunately bribe people or pay off that many people that you could actually cover a system like that. So by decentralizing it, the data has to be validated by multiple people before it can actually be substantiated. So when you look at a system like that, anything from land titles to insurance to any of these things that they have to speculate because they don't really know what's going to happen, it can document all of that and keep a full record of it.
Are we seeing mass adoption in those areas you're describing?
You're starting to see a lot of governments start to use it, whether it's for government contracts. You're starting to see a lot more for land and title recognition. Because I know, at least in the United States, there's a title search company that has to do a title search before you buy a property, and they have to validate everything. That'll eliminate a lot of that stuff because all this will be documented and it'll be validated by multiple people. So no one person can change that without being validated by other parties. So once you get into an environment like that, it cuts out some of those middleman services and it gets rid of the opportunity for corruption or theft or inaccurate information. So when you look at anything like from the government to banking systems to any of that stuff, it will hopefully solve a lot of those issues that we run into where, wire fraud or any of these other kind of scams that are out there right now. Blockchain will help solve a lot of that stuff. And you're actually starting to see JP Morgan Chase just came out, I think, 2 months ago.
I think it had just come out when we were speaking last. Just talk us through that, because that was quite a big development, because Jamie Dimon, for one, was highly skeptical about this whole business, and then all of a sudden he brings out this JPM coin. It seemed to me for a coin that was designed purely for JP Morgan's clients. Is that correct?
And I think what their goal was to test it internally and get people used to it, at least their client base, because it's natural. I mean, you already have a contained environment. It's your clients. They already have their money with you. It's just another form of currency for them to exchange it. But it is interesting the fact that he came out, he was so anti-cryptocurrency.
Yes.
But at the same time, they were buying up.
You mentioned this.
Yeah, they were buying up all the intellectual property that was surrounding it. So it was inevitable that they were at some point going to come out with it. And I think they're doing it in a smart way. They're doing it on a micro level with their own clients versus releasing it out to the public first. So if they can get them used to it, show that it's proven, and then I'm sure they're going to roll it out to other banking systems and everything else that they have.
But it seemed to me he was talking about what would be called a stable coin, right? It would be dollar backed. There theoretically should be no fluctuation in his coin. So tell us a little bit about, what's the difference between that type of coin and these other coins where we see fluctuate, enormous amounts in a blink of an eye.
Yeah.
What's the difference?
So if you look at like Bitcoin or Ethereum, any of them, they were obviously the first coins to come out. They never really had a utility, and they weren't backed by anything. It was really based off of whatever value you perceived it to be. So that's why you see these huge fluctuations, because it's based off speculation. It could, somebody could literally write an article saying something's going to happen, and it could change the price of that. What you're starting to see more come out now are stable coins, like you mentioned, which is backed by the US dollar. Your asset-backed types of coins, which might be gold, might be real estate, but it has a tangible asset behind it. So it's really hard to speculate on that. Like you can't you can't fluctuate the price simply by trading a lot of it right away. It's going to have more of a steady trajectory, maybe level off or something like that. But with a Bitcoin or Ethereum, you have these massive spikes because there's really nothing backing it. It's whatever that person perceives the value to be. So it's really easy to manipulate a market like that. If you have a ton of those tokens, you can dump a bunch in the system.
There was quite a bit of research to that effect. I can't remember the university. It was an American university which was talking about this sort of pumping and dumping of these coins.
Exactly.
And I think it described it like the Wild West.
It's almost like you can see that sometimes in the stock market, if somebody has a ton of stock in one particular company and they dump it all of a sudden, like you can have a lot of fluctuation in it. But when you start talking about stable coins or asset-backed coins, there's a tangible asset behind that. So unless, like you were mentioning with JP Morgan's backed by the US dollar, unless the US dollar suddenly has this massive depreciation, that token should realistically not have that much fluctuation in it.
Is the intention that in your case that you would be more inclined towards a stable coin type scenario, or are you going to issue a coin which would fluctuate more?
Ours, if we get to the point where we issue the coin,
would you get to that point?
I think we would. We want to wait and see what comes out from regulations. Obviously, we want to play within the realm of what governments are allowing, so that we're on a fair playing field. But for us, since it is asset backed and we're paying an interest rate, our coin should either be stable or continue to rise at the steady rate of the interest rate. And it's been documented the last 14 months or 16 months that we've been running with this program. We've seen just a steady trajectory up, and we've actually beat our expectations that we
really?
Our guaranteed rate.
Yeah. Oh wow. Okay. And that's a perception that it's a safe haven. People want to put their money in there. Is that what's driving that?
Yeah. Safe haven, again, asset backed. We know that the interest rate's guaranteed. We have insurance rider over that if something were to go wrong. And then, so the way ours is structured is you can get either monthly payments or you can roll that back in just like a savings account would. So when we start seeing the compounding interest from people rolling that back in,
it makes a material difference.
Yeah, it makes a huge difference. So it allows us to do things like that, and the liquidity that we'll have from the blockchain, it gives us access to, easily liquidating the investment if somebody needs to get it out faster. It gives us flexibility of doing smaller investments so that, especially when we start talking with the telecom companies, realistically we'll be able to do as small as $1 or $2 at a time.
Is that right?
Yeah.
That's that would be incredible. That's true democratization, isn't it, of the financial markets?
Yeah.
To talk to us a little bit about what you're seeing in terms of the big macro trends. What do you think is going to happen in this space over the next? Is it going to take over the world? Are we on the cusp of this whole thing going completely mainstream, or is it?
I would like to say that at least blockchain will start being integrated more. There is some pushback about it because obviously some people don't want to have full transparency over all of the information. So I think once it gets, once we have enough case studies and samples showing here's what we were able to produce based off of converting everything to blockchain versus using traditional data storage information, I think it'll be adopted a lot faster. What I really like is that over the last, let's say 6 or 8 months, you're starting to see governments come out with blockchain regulations. I know Kenya is right now developing their blockchain framework. And we're actually hopefully getting in the sandbox to work with them on that. Yeah. But I think once you start to see governments initiating laws and regulations on how they interact with blockchain systems like this, it'll be a lot clearer for everybody. And once that's clear, you'll start to see companies indoctrinating it. I think they're still afraid that they're going to do all this work, find out that they did something that, once the regulation comes out was inaccurate, and then they're going to have to go back and fix it. Yeah. But between like the Bahamas and Singapore, and with Kenya working on their program right now, the more countries that adopt this, put in regulations on how to manage it, you're going to see it adopted a lot faster.
You brought up Bahamas previously and Singapore as well. Are these leaders in terms of your mind of people in this economic space, Bahamas and Singapore?
I think they're very receptive and they're open armed to bringing in this type of industry because they see the potential for it. I mean, let's face it. I mean, look at the amount of cash that's flowing through even Bitcoin or Ethereum. I mean, to be able to embrace that, have regulations so people know how to play with it and what they can do, what they can't do, it'll start attracting industries to come into those regions that have those regulations. So I think what you're starting to see is a lot of the underdeveloped or developing countries, they're hungry for that business. So they're like, okay, how do we get this in place now so that we can start attracting them before all the bigger countries set up regulations and everything else.
And you don't really have to reinvent the wheel, right? You can pick and choose from what you're seeing.
I mean, you can look at the regulations that have already written, figure out what applies to your particular country or your particular region, and then just modify it a little bit. Because I think based off the regulations that I've seen written so far, they're very clear, very transparent as to what you can do, what you can't do. So you don't really have to reinvent the wheel. It's just figuring out what subtle nuances you may have to apply to your particular region of the world or wherever it is.
Last time we were speaking, you were telling me there was a hotel or a property in New York which had been tokenized. Have there been any further developments in that space?
I don't know if there have been in New York, but I've seen a couple other countries that have actually started tokenizing real estate. There's a couple small companies that are coming out, mostly out of the Asian markets, that are kind of jumping on that sort of trend of tokenizing properties. I haven't really studied it to see how well they're doing, but I know I've been able to see at least 3 or 4 other companies come out that are starting to do this. So you're starting to see a little bit more widespread adoption of it.
And would you expect that to be a model that could disrupt the capital markets, or you think it's going to work as a piece of the capital market?
I think it would work as a piece of the capital market. I don't think you're ever going to replace it, but it is going to start to change. It's going to start to shift in different directions based off of these companies that are coming out and starting to utilize it.
And just for me to be clear, in a tokenization scheme, let's say, of a property, for argument's sake, this building, can someone invest as, what's the smallest token someone can buy? Theoretically,
it could be as low as $1, I mean, it could be any micro investment. It's just how complex you want to make it, the blockchain system.
Okay, but it's basically a method for countries to use for privatizations and so forth, right?
You can look at it for like infrastructure projects, road projects, anything that you can generate a revenue from at some point to be able to pay that back or to add value to the actual tokenization. I mean, the opportunities are limitless. I mean, I can almost, if somebody threw a scenario at me, I could probably figure out a way that by tokenizing it, you can get the investment ahead of time, cover all the costs, and then be able to build it. And then as long as you pay them back into something,
I think we should look at that.
Okay.
Now let me ask you. You've visited many times Africa. I think the first time you told me you came with Branson's Mavericks.
Yep.
You were in South Africa. You've seen this place now up close and personal. If you were advising African policymakers about how to interact with this new world, what would you be telling them?
I mean, I would say be open to the idea of blockchain and understand that there is a difference between blockchain and cryptocurrency. I think that's the biggest obstacle and I wouldn't say necessarily in Kenya, but in a couple other countries where I've spoken to politicians, is they don't really understand what it is. And it can be confusing. But if they bring somebody in or have somebody on their team that really understands the difference between the two and understands you can separate them, there's a huge value in what blockchain can offer, even beyond sort of this tokenization and the whole currency side of it. Just in terms of data and access to accurate information and just transparency. I mean, that's the biggest thing with blockchain is it gives you full transparency over everything that's going on.
Which is one of the biggest challenges here on the continent, is a lack of transparency and a very uneven playing field. Asymmetric information flow. So this is something that should fix that kind of problem.
It should, yes.
Yes. And Gary, overall, so you're focused on Kenya, in particular, East Africa. Do you see this as an Africa-wide opportunity?
I do. Obviously, each country has a little bit different government system and laws that we have to abide by. So our goal was to get it set up within Kenya, show the model, prove it, and then as we roll out, go out to other countries. Because our original goal was just to go continent-wide. We realized that's not very efficient when you're trying.
Jurisdictions. It's not easy.
Yeah. So we will start to roll that out to each other or to every other country as well. Just figuring out which governments are more receptive to it.
Yeah.
Because obviously we don't want to come in and create a whole bunch of issues. So we want to work with the countries that are more open to it, acceptive of the process that we have, and then also can see what we're doing and let us help them kind of plan it all out for them.
And so far you're reaching out in Kenya, yeah? And anywhere else?
We're looking at Rwanda as well.
Yes.
So we've got some really good connections over there. We've had some great conversations with them. I think it might be a little bit slower process, but I think once we get Kenya up and rolling, and then roll back into Rwanda and start talking to some of the banking systems over there.
And my final question is, we talk a lot about the hedging component. The guy on the street, I was doing an interview with the Tanzanian radio station, and they were saying, Ali Khan, it's not just about somebody who's got $10,000, it's also somebody who's got 50. The $50 guy, is he able to get on your scheme?
He will be. Once so we have kind of a two-track system. We're going retail, and then we're going more institutional. Once we get into the retail side of it, working with some of the telecom companies and be able to do almost like a one-click solution within their management systems, that will give them access, give kind of that everyday guy that might have $50, $10, whatever it is, that wants to put it away, to be able to do that and then do the currency conversion. So our technology will do all that on the back end, and we'll be able to seamlessly just shift that back and forth between their accounts.
We look forward to this.
Thank you. Thanks for having me again.